Hello, good afternoon, everyone. How are you? I hope you guys are keeping safe and staying home. So, finally, we have reached this final lecture of the entire syllabus of BCK. I think it's been so far so good for all of us, right? Talking and interacting with all of you with all these questions and doubts. I'm really glad you guys are actually asking a lot of questions, which is good because you are actually studying, right? That is what the essence is. So before I begin, let me just share my screen and then we will start. Okay. So here we are, the last session today. And I see a lot of you have questions on the MCQs. We'll come to that. But before that, let us just start with the basic agenda of today's session. That is chapter 6, right? In this entire syllabus of BCK, we have been talking about business, economic activities, business environment, different organizations, the history of public policy, why is India a mixed economy, what was LPG, right? We also talked about, like in chapter 5, we discussed a lot, many new things, right? I saw you guys had a lot of questions. And finally, we are at chapter number 6, which is again a very important chapter from two perspectives, right? The first is each one of us should understand in the profession we are going, right? I'll be very honest. When I started like this syllabus, when I started studying for chartered accountancy, there were a lot of new things I got to know about finance, about stock markets, about business, right? And as you grow as a professional, as you start working for an MNC, or as you start interacting with a lot new people who are already in the industry or in practice, you find that they talk in a different language, right? That the way they talk, the words they use are actually so technical that most of us find it really challenging to understand what they're saying. And unless we understand something, how are we expected to even advise or answer, right? So from the very beginning of the syllabus, of the very first step of this professional course at the foundation level itself, it is really important that we understand some of the basic terminologies, right? So in this particular session today, there are a lot of terminologies given in the study material, but I have focused on major ones which I thought are really important to discuss and I thought are really tough, or maybe something that we need to discuss in major. Like some of the terms like what is asset or what is income, I don't think like any of us would want to understand the definition. We know what it is, right? So instead that you have to study that anyway, you have to go by the study material. But for today's session, my focus is on talking more about spending more time on the terms which are more technical, which are more tough, right? That is what I believe. Right. So before I begin this chapter, I'll just there's this email ID on the screen. Like this is the last session today for BCK from me. Right. So with this, we'll complete our entire syllabus. But if you have any doubts, if you have any questions after this session, because after this session, I won't be able to be interacting with you guys on a live class or any mode possible, right? So this is the email ID where you can post most of the questions. Yes, it takes a bit of time for us to reply because a lot of projects are going on, but be assured each and every question will be answered. That is what I'm saying. Like give us time for at least this week. By Friday, I'm aiming we'll answer all the questions and doubts that you have. Please send your questions and doubts on this email ID that's there on the screen right now, right? And all those questions and doubts, I would really request instead of asking the MCQ questions, it would be really great if you guys ask more of the conceptual questions, right? Because the idea is to not get the answer right from the MCQ, because most of the answers in the study material are correct, right? You have to go by it. You have to understand the logic. But if you have problem understanding some of the concepts, like why is it, what is that, what is this, maybe first thing I would suggest is go back, look at the lectures you have around. This is the 10th lecture in the playlist, right? So go back, revise through the lectures. If you're not able to understand that, shoot a mail on this email ID. Or I would also suggest Google things, right? I'll be very honest with you. Like this is out of context, but as like if I can just tell this, how I look up things is go on the internet and find it. Even if you don't find, then obviously you have a lot of people to help. And this is the email ID where you will get all the answers related to BCK or any chapter or any like the what can I say syllabus, right? Okay. So lexicon is and thank you so much. I'm getting best of luck today as well. So thank you so much. Right. So what do you mean by lexicon? Lexicon is words, terminology, right? We'll discuss that. That is the essence of today's lecture. Right. Okay. Okay. So let us just straightforward dive into this. And last 20 minutes, as always in the sessions, last 20 minutes will be for doubts. I see a few of you have doubts from chapter 5 in MCQs. We'll discuss that. Right. So be assured the agenda, like I would really want you to concentrate for the next 1.5 hour on understanding the different terminologies, what we are going to discuss. I'll try to make it as easy as possible, right? So focus on that. Be assured of the questions. Everything will be answered. I hope I've been answering everything till now, right? So let us just straightforward dive into chapter number 6, which is business terminology. A lot of you have questions. What is lexicon? Lexicon is actually means vocabulary, words, terminology. That is the meaning of lexicon. Business lexicon means business language, right? If I say what is this lexicon? What is this language, right? So lexicon means the language, how things are said in a different way in that particular sector or segment, right? Okay, straightforward, getting into the facets, features, different sides of a business. Like we have been talking a lot about businesses, about industries, corporations, big and small, public, private, government, non-government, not-for-profit, this and that. But every business has some core five different sides, 5 different functions, right? So that is what I'm talking about, the facets, right? So every business has different facets, different features, different sides of it. The first one is the technical side. That is, what is the product you have? What is the service that business is giving? What are the inputs? What is the process? What is the output? What are the services it is giving or taking? Right? That is the technical aspect, technical feature, technical side of a business. Right? Then the second one is the commercial. We have all studied, most of us who are from commerce background, if you're from science, be assured, I think I've made it really easy for even for the science background people. That commercial side is the product, price, place, and promotion, the 4 P's of business, right? The commercial side, like product, price, place, and promotion, right? Coming to the third side of the third important function of business is finance, right? Making money while being socially aware. That is what we discussed. But the core is to earn money, right? So financial is money and margins. Margin means profit. Right? So financial aspect is earning money, making good profits. That is what business is all about. Then fourth aspect is human resource. That is HR. The people who are working in the organization, the people policy, how are people like looking at things? How do people want things? Right? That is what the HR policy is. That is what human resource is all about. And finally, we have administrative, the internal organization structure. How is it functioning? What is the organization structure? Who is the head? Who is the management team? Who are the people working in the organization? Who are managing it? Who are the shareholders? Who are the creditors? Who are the debtors? The administrative aspect. So every business has 5 main functions, 5 main facets. That is technical side, the commercial side, financial side, human resource, the people, and the administrative side. Right? So that is the basic understanding. Before we dive into the terminology, this is what a business is all about, right? It is a combination of multiple activities, multiple functions, and these are some of the core 5 functions of any business, right? Coming to a very interesting thing, I think most of us have seen this many times, right? So if you see some of the packages you have from Amazon or Flipkart or Myntra, right? You have all these packages coming from your sites, or some different, when you shift your house, you have this fridge or you have huge mirrors. On that packing, you see there's written fragile, handle with care, or there is like keep dry, or some HRC, or use no hooks, right? So these are some of the like logos, some of the codes which are universal, which are used around the world in the same manner, right? Be it anywhere in the world, you will see 99% of these things are same, right? This is some of the common things around the world for all businesses, right? Like veg and non-veg. Any edible thing around the world, you go to USA, you go to Europe, you go to Africa, you go to Middle East, you go to East Asia, you go to Southeast Asia, right? You see that veg and non-veg. Veg is green, non-veg is marked with red. These are some of the universal codes. These are some of the universal lexicons, right? Some of the language, business language, which is used around the world in the same manner, right? Be it barcodes. You see, the barcode technology is universal. It is same around the world. You go to any shop and anywhere in the world, the barcode system is one and the same, right? This is how the barcodes or the QR code nowadays. You have this web WhatsApp thing, you have that QR code or Paytm, UPI, Google Pay. You have this QR, it is same around the world. So these are some of the common codes used by all businesses around the globe, right? Okay. The chapter today is divided into 4 segments, right? The chapter of business terminology is divided in 4 segments. That is, first we'll study some of the technical, like I'm not going to cover each and every terminology because I think some of them are very basic, which each of one, even by reading it from the study material, will be able to understand. But some of those which are technical, I'll discuss that today. So finance and stock market related terminology, marketing related terminology, banking related terminology, and finally we have other business terminology, like some of the terminology which are very common to each and every business around the world, right? Going forward, I see a few questions. Let me see if you have any doubts, and then we'll go. Yes, doubts and everything will be at the last 20-25 minutes is what I've planned. Let's see how fast I can go with this chapter, right? Yes, this is the last session, and okay, albeit means although, right? Google it. That's what I'm saying. Instead of even if you have a doubt, even in the English language, right? Best thing is go to Google, like type define albeit, it means although, right? Okay. Yes, there will be negative marking. The question paper will be MCQ based, right? 40 marks paper, and we have 100 MCQs from business economics and BCK combined, 60 from economics, 40 from BCK, but it will be a combined paper of 2 hours, right? So there won't be a segmentation. There would be a 2-hour paper with 100 MCQs, and you will have 40 from BCK, 40 from business economics, right? Okay, what is HR do? HR helps in talent acquisition, finding the right people for the job, training them on the job, promoting them when they do good, ranking them. That is what HR does, right? Okay, coming straight forward to finance, stock, and commodity market terminology, right? Finance, stock, and commodity market terminology. So what do I understand by this? Finance, stock, commodity market terminology, right? The first terminology, the first word we're going to understand is amortize, right? So what does amortize mean? Like I'll try not to go by the definition, because if I just straightforward read the definition, doesn't make any sense. You can read that too. So I'll just give you some examples. I will just be more interactive, try to make sense of that word, right? So amortize is actually, annuity comes from the word annual, right? So a series of payments of equal amounts. Like it is actually, like when it comes to use, it might not be annual, but it is equal payment over a period of time, right? Like life insurance premium. Every year you have to pay 6,000 rupees as life insurance premium. So that is annuity. For on a fixed period of time, you pay the same amount every quarter you have to pay. That is annuity, right? Fixed amount in a fixed manner is to be paid out. That is annuity, right? Okay. Coming to arbitrage. Arbitrage is one of the best things that most of the people on the stock market do. Arbitrage is actually, right? Arbitrage actually means reducing your risk. So arbitrage is basically purchasing and selling the same thing in different places. I will give you a pure example, right? Gold in New Delhi is for around 54,000 rupees per 10 grams, but it is for 53,600 rupees in Chennai. Okay. So gold is 53,000 rupees in Chennai and 54,000 rupees in Delhi. If I buy in Chennai and sell in Delhi, I earn 1,000 rupees, right? Straightforward. Same commodity, same thing, I'm selling in 2 different places in the same day, and I'm gaining out of it. That is arbitrage. What is arbitrage? It is a simultaneous purchase and sale of 2 identical commodities to take advantage of the price variation. Gold in New Delhi, 54,000 rupees. Gold in Chennai, 53,000 rupees. I buy gold in Chennai, sell it in Delhi in the same day, I earn 1,000 rupees for every 10 grams. That is arbitrage. As simple as that. Right? Right? Okay, so amortize. Why I think amortize is as simple as depreciation. Depreciation is on fixed assets, amortization is on intangible assets, right? Writing off your intangible thing, right? That is what I said. Gold in New Delhi, 54,000. Gold in Chennai, 53,000. I buy in Chennai, sell in Delhi, earn 1,000 rupees. That is arbitrage. That is what I did. I did arbitrage of gold, right? Okay. No, arbitrage is actually stock market. It is not a resale business. It is for gaining from that price difference of the same thing, right? I'll give you even simpler example, right? If you think, let's suppose you get a packet of chips for rupees 10 and you can sell that packet of chips at rupees 11, same packet for rupees 11. That is not reselling, but there is price variation due to some other factor, right? Resell is buying from a wholesale and keep it in like intangible assets. I think most of us know this. What is intangible asset? Assets which cannot be physically touched are intangible assets. Intangible assets are assets which cannot be touched, right? Like patents, copyrights, trademarks. What is an asset? Asset is anything that can give me future benefit, which can give me future cash flow. Right? So a patent, a copyright, a trademark can give me a future cash flow. They can actually generate money for me in the future. That is why they are assets, but I cannot touch a patent. I cannot touch a copyright. There is no physical like building, like furniture, like computers, like cars, like your rent or like your rental property. There is no physical existence, but they are assets. So assets which do not have a physical existence are actually intangible. That means not touchable. They are untouched. They cannot be. There is no physical presence of that asset. That is intangible asset, right? Okay. Coming to the next one, that is ask and offer. Simple. I am asking you, give me 10 rupees for this securities, futures, options, a lot of products, right? So a stock market is a place where people buy and sell shares and debentures. Now someone is asking, the person who is selling that stock, who is selling that debenture is asking for a price, right? That is what ask and offer is. It is the lowest price. It is the lowest price at which an owner is willing to sell his security. I say minimum, okay, not 10, give me 8 rupees for this light. This is my ask price. This is my offer price. I'm asking you to give me 8 rupees at the lowest for this thing, right? That is what ask and offer even in stock market is. The lowest price that the person is asking for is offering to sell at, right? That is what ask and offer is, right? Okay. Video should be okay. I think the network is clear. I think must be problem on your end, please. If you can just check that. I think the voice and video are absolutely right on my end. Right, I have that metrics on my screen. I can see it's okay. So if there is an issue, if it's lagging, please maybe reconnect or something from your end. Right? Okay. Talking about bad debts. Right? What is bad debt? What is a debtor, first of all? Debtor is someone from whom we have to take money, right? Debtor is someone, is a party, is a customer from whom we have to take money, right? He or she is a debtor. Now, if that person says, I don't have money, I will not pay you. From a person, I have to take a money, that person is a debtor. That person says, I will not pay you any money. That is a bad debt. It is a bad debt. I am not going to get any money from them. I am not going to get any money from that particular person. He or she becomes my bad debt, right? Bad debts are amounts owed to a company that are not going to be paid, right? Someone has to pay me, like your friend, like anyone of your friend takes rupees 10 from you, right? They take rupees 10 from you, like 10 is very small. Let's suppose they take 500 rupees from you. Now that he or she is your debtor, right? They took 500 rupees from you, they are their debtor. Now this friend says, I'm not going to pay you, do whatever you want to do. right? I'm not going to pay you anyway. Do whatever you want to do. Now he or she becomes your bad debt, right? They're not going to pay you money. You have to get that money, but you're not going to get that money anyway now. They're not going to pay you. Bad debt, right? Okay, coming to the next term used in the stock markets. We are talking about finance, stock and commodity market terminology, right? What is a bond, right? I will tell you, I will give you a simple example, right? Bad debt means debts which are irrecoverable. Absolutely, yes. That is what bad debt is. Irrecoverable. You cannot recover that, right? I think I explained amortize. If you have doubt, we'll talk it like the flow would break. We'll discuss if any of the terms are not clear at the end then, right? Okay. I think the video is better now, right? Because the network is really good on my end. Touch wood, right? Okay, okay. Coming to bond, I will give you a plain example of bond, right? Now, let us suppose when we talk about marriage, right? When we talk about marriage, we say it is a very pious bond. There is a bond between the wife and the husband, right? What is a bond? Bond is type of a promissory note. Similarly, if you look at the stock market, it is a promissory note. Like a husband and a wife like do that 7 fairas and they promise each other that whatever happens, I am going to stand with you. That is what bond is even in the stock market. It is a long term. Marriage is also a long term promissory note. They are promising you. It is a written record of debt payable in the future. Bond says whatever happens, you are giving this money, you're buying this bond, I will give you back the money, right? So when I buy a bond, let us suppose I buy a bond for rupees 1000. That means I am giving 1000 rupees to the company, which is giving me a written bond, right? They're giving me a contract in writing that yes, you have given me 1000 rupees. I promise to pay you back this 1000 rupees is what a bond is, right? So it is a long-term promissory note. It is a written record of debt payable in the future for that company. Like for me, that company is my debtor. They have to pay me 1000 rupees, right? So that is what a bond, a written long-term promissory note, which says, I will give you the money in the future because you have given me 1000 rupees today. I will give you the money back. It is a bond, right? Okay. Yes, just like James Bond, he's promising, whatever happens, I am going to fight and give you the money, right? Absolutely, you're getting it right. The logic should be clear, right? The logic. We are talking about the stock market. Do not get like flown away in the words. We're talking about the stock market. So in a stock market, if I'm buying a bond, I buy a bond, which means I'm giving 1000 rupees. I'm buying a bond for 1000 rupees. And that particular company which is giving me a bond, a written record, giving me a written contract that you have given me 1000 rupees, I will give you back 1000 rupees, right? In 3 years, in 5 years, right? With interest, obviously. That is why I'm giving you 1000 rupees, right? So you give me 1000 rupees today, I will give you 5100 rupees, like 1500 rupees after 5 years, right? So that is how it works. Okay. Coming to the next term, book value. Like all of we are studying accounts. What is book value? Book value means the total assets minus total liabilities. That is the book value, or it is the value at which an asset is recorded in the financial reports. As simple as that, right? A book value means total assets minus total liabilities. That is the book value of the company. But a book value of an asset is the value at which it is there in the financial statements. It might not be true, right? A book value might or might not be true because the market value can be different. This is something I think most of you have covered in accounts, right? This is more of an accountancy term, right? Okay. Any questions? Amortize and depreciation. Simple. I can give you. I think a lot of people have a problem in amortization. If you know what is depreciation, right? Amortization is exactly the same thing, but depreciation is on fixed assets, amortization is on intangible assets. As simple as that, right? Depreciation on fixed assets, amortization of intangible assets. Depreciation of intangible assets is called amortization. That is how you can understand amortization, right? Okay. Maybe. Okay. Yes, we can buy bonds just like shares in the stock market. Absolutely, yes. Stock market is like big bazaar. Okay, it's like I'll say not even big bazaar. It's like Amazon. It's like online. You have different products. I want to buy a bond. I want to buy a share. I want to buy a share of this company, this company, this company. Or I want to go and buy a mutual fund from a bank. Or I want to go and buy futures or options. Or I want to hedge. Or sorry, I want to arbitrage. Everything is there on your portal, whichever broker you use, like Motilal Oswal or Zerodha, whatever different broker you use. It is like a portfolio. It is like a shop where you can go and buy different things, right? Coming to break even point, I think everyone knows what break even point is. No profit, no loss. It is the point where there is no profit, no loss. I recover my entire money. That is break even point. I spend 1 lakh rupees and I generate a revenue of 1 lakh rupees. There is no profit, no loss. That is break even point, right? Let us suppose I say for starting a business, I will have to spend 10 lakh rupees, right? I have to spend 10 lakh rupees. And in next 5 years, I will generate a revenue of 10 lakh rupees. So my break even point is achieved in 5 years. In 5 years, I will be at a point where there is no profit, no loss. I will only recover my cost, right? No profit, no loss, only recovery of cost. That is break even point. It is the amount of revenue from sales, which is exactly equal the amount of expenses. That is break even point in the simplest terms. No profit, no loss. When you recover, when you get the revenue which matches the entire expenses you have done, that is break even point. What is a base price? What is a base price in stock market? Okay, I will give you an example. When the stock market opens in the morning, right? When the stock market begins its function in the morning, there is a price for every commodity, for every share, right? There is a price for every share, and from that share starts to grow or fall, right? Let us suppose this morning 9:15 the market opened and the share of, let's suppose, Infosys Limited was at 1,000 rupees, right? So that is the base price. The price at which at the beginning of the day the share price was, that is base price. From that base price, it will either grow to become 1,200, 1,050 rupees, or it will fall to 950 rupees, 970 rupees. That is what is base price. It is the price of security at the beginning of the trading day, which is used to determine the maximum and the minimum, right? If it grows, maximum. If it falls, the minimum price. The base price is the price at which the security begins every morning on a trading day, right? Every morning when the market opens, whatever is the price for a security, that is its base price, right? Okay, equilibrium point is break-even point. Absolutely, yes, wonderful. Appreciation is growth, depreciation is fall. If the stock is appreciating, it is growing. If the stock is depreciating, it is falling. Okay, debenture also comes under stock market. Absolutely, yes. Debentures are also bought through demat accounts, dematerialized accounts, right? It is part of stock market. Is retailer an example of arbitrage? No. So I will tell you, the retailer is actually buying goods to sell them at profit, right? Arbitrage is selling the same product, selling the same commodity. We're not talking about the product, right? It is not where I'm selling Pepsi or chips, right? I buy a bottle of Pepsi for 45, I sell it for 46. That is not arbitrage. We're talking specifically about the commodity and the stock markets. When the same thing, when the same commodity is sold at different price due to price variation. I will give you an example. Foreign exchange. Okay. Foreign exchange is the biggest place where arbitrage happens. Now let us suppose the INR to USD rate is 75, right? 75 rupees make up $1, but 11 Chinese yuan make like Chinese yen or like make $1, right? Okay. Now, so Chinese money is actually stronger than INR, but if you convert it into decimals, right, it is not the same maths. Now, if I say like I'll make it simple. 10 Chinese currencies make 1 USD and 70 Indian currencies make 1 USD. That means 7 Indian currencies make 1 Chinese currency Actually, this should happen, but this does not happen, right? So instead of 7, it will be like 6.8 Indian currencies make Chinese currency. Now this 0.2 is where people gain money, right? They will buy dollars and then they will go and convert it into Chinese currency, so that this difference of 0.2 is the gain. This is the arbitrage that they do. That this is what arbitrage is. Finding the price variation of the same thing in different locations, in different places, and then gaining from that. That is arbitrage, right? Okay, coming to absolutely. Yes, LinkedIn is one of the best sites to understand different organizations. Yes, book value is higher than market value. It can be not, right? Really depends. There are a lot of case scenarios, a lot of cases where it can happen. Okay. The weightage of all chapters, there is no certain weightage, right? I'll be very honest, there is no weightage of any chapter. It's going to be a mixed bag of questions, right? There is no set weightage, like which chapter is how many marks. If you think chapter 3 is very tough, I leave chapter 3. I'll be very honest, there is no weightage, right? You have to study each of, like these are small chapters, like come on. These are small chapters, 6 chapters only. I think you can revise them in like 2 or 3 days maximum, right? Even the lectures are like, this is the last session, even those 10 sessions are like 200 hours, like 2 hours into 10. So 200 hours, right? Oh, sorry, 20 hours. What did it say? 200. Only 20 hours, not even one day. Like you can go and revise. No profit, no loss is break even. Yes, yes, yes. We are coming to Badla. The arbitrage is making speculations. Absolutely, yes. It is related with speculations. Demat account is the account which keeps. It is more like your bank account, but of shares. Right? It is like a bank account. You have a passbook. You have all the transactions that you. But it is more what you do on the stock market. That is what demat account is. Coming to the next terminology, basket trading. What is basket trading? Basket trading is a facility where investor can actually invest in all the 30 shares of Sensex. Sensex and Nifty. Sensex has 30 top companies, like 30 top companies define the sensitive index. Sensex is sensitive index. 30 top companies form the Sensex index. 50 top companies make the Nifty, right? That is, your Nifty index is made by top 50 companies. And Sensex is made by top 30 companies, right? So if a person is saying, I'm going to do basket trading, that means he or she is saying, I'm going to buy or sell in all the 30 companies which are there in the Sensex, in the sensitive index, in the Sensex, right? That is what the basket, he or she is taking the entire basket of Sensex. Instead of going, buying and selling 2 or 3 shares, let's suppose I say I'll go for HDFC, I'll go for Tata, I'll go for Infosys, and I'll go for TCS. No, if I'm doing a basket trading, I'm going for all the 30 companies which are forming the sensitive index, which are forming the Sensex. That is basket trading, right? There is a basket already. It is like a Diwali basket you have, right? You have all those chips, you have like Choco Pie, you have those dry fruits and everything. There is a well-built basket, and you say, I'll take up the basket. I'm not going to buy only Choco Pie and Son Papdi. I'll go for everything that's there in the basket. So that is what basket trading is in share market. That going, buying or selling in all the 30 securities on the Sensex, right? What is Badla? Badla is a very technical term. Badla is something that is very, very like related to only to the stock market. So it is like when the day ends, right? When a stock market ends, there are particular trading days where there is set time of stock market. We'll study that. There is a set time of stock market when at the end of the day, when there is no settlement, right? I couldn't sell or buy. So what I do is I say, let's take it over to the next day, right? Let's suppose you are studying. And you say, I'll complete chapter number 2 today. But you think I'll study till 8 p.m. in the night. And if I complete it, well and good. If I cannot complete, I'll take it up first thing in the morning when I wake up at 8 or 9 a.m. I start studying. First thing I'm going to do is I'm going to finish chapter 2, right? That is what Badla is. Carrying forward of transaction from one settlement period to the next without affecting delivery or payment, right? You anyway complete your chapter. You anyway complete your syllabus the next morning. right? But there are charges. There is margin money and there is contango, that is interest charges. Because you wasted time, you did not complete. You thought you will complete your chapter till 8 p.m., but you did not. Now you will have to pay charge. You will have to pay extra money because you are taking it off over to the next day, right? There is a penalty. It is like a penalty. It is like a charge because the other person is waiting. The other person might want to buy your, like other person wants to buy your security at the end of the day, but you say like, boss, the transaction is not successful. Let's talk tomorrow. Let's like go for this transaction tomorrow. Now the other person who has been waiting to buy or sell is actually going to lose money, right? Somewhat, because share market is volatile. So there is margin money, there is interest rate, contango or badla charge that is charged in badla. That is the simplest way you can understand badla is carrying forward your transaction to the next day, right? And because of that, because you are carrying forward it, because you're not executing on the deadline, there is a charge, there is an interest rate you have to pay as penalty, right? That is what badla is. Okay. The basket trading can also be for Nifty, but it is more common for Sensex, right? Okay. Why is it called badla? Because this is more like a Hindi term. Instead of today, they're going today. They're actually going to deliver tomorrow. There will be a transaction. There will be a give and take. Tomorrow there will be a badla. There will be an exchange, right? So that is why they say let's badla. That is tomorrow we'll exchange it. Not today, we'll exchange it tomorrow. That is badla, right? Absolutely yes. So yes, dollar to Chinese yuan, wonderful. If you're checking that, like I was just giving a hypothetical example, it's 6.79. That means China is becoming way stronger than India, right? Okay. So the person who do basket trading have full control of the stock market. No one will ever have full control over the stock market, right? As simple as that. It is super volatile. Even Mukesh Ambani does not have full control over the stock market. No one can have a full control over the stock market. However, they can reduce their risk. They can actually calculate risk, but no one ever has full control of the stock market. Okay, can we buy bulk shares through Sensex? Sensex is just index. It is like your thermometer, which tells you the temperature, right? Sensex is nothing but an index. Like a thermometer tells you that you have a fever of 99 degrees. Sensex is like it is telling you the market is doing really good. The market in totality has gained 200 points or 50 points or 250 points, or there is a negative 200 points in the market. It is just an index, right? It is just like your thermometer for fever. Sensex is the thermometer of stock market, or Nifty is the bigger thermometer of your stock market. Yes, absolutely. The top 30 companies, the top 50 companies in Sensex and Nifty keep changing. Not frequently, but yes, they do change. Right. Badla in English means revenge, right? Badla is also exchange. I'll take it in a more positive way. Instead of talking it as a revenge, it is more like exchange. That is how I would want to understand. Either way, revenge is like if you're not buying it today, you have to buy it tomorrow, but you have to pay me extra money. Margin money, contango, the badla charge. You can take it either way, right? What are blue chips? Blue chips are shares of the large, well-established companies which are sure shot to make good money in the stock market, right? Blue chips are major big companies. Blue chip companies are big organizations, which are the people trust those companies because they do really good. The track record, the history of that company is that they make good money. They actually function very, very well in the stock market. That is why they are blue chip, right? Large, well-established financial sound companies which have impressive record of earnings. Really good companies like TCS, Infosys, Asian Paints, right? These all are blue chip companies like Microsoft in India or like these are really good blue chip companies because they are huge organizations which are generally supposed to do really good in the stock market. That is blue chip, right? Blue chip is the one of the top-notch primest companies in the stock market. Blue chip companies, right? What is bid? Bid is nothing but the highest price a buyer is willing to pay. You have seen auctions, right? Auctions have bidding. Like someone says, I will buy this pencil for 10 rupees. Someone thinks, I think this pencil, I'll buy this pencil for 12 rupees. Someone says 13, someone says 15, someone says 17, someone says 20 rupees. So they are bidding, right? The highest price. Now, if someone says, I will buy this for 20 rupees, everyone says, okay, you buy it for 20 rupees. I don't think this is for 20 rupees. But if you want to buy it for 20 rupees, go ahead. So the highest price the buyer is willing to pay for a stock, right? That is bid price. Someone is bidding. Someone is wanting to pay the highest price for that stock. That is bid. Whenever there is an auction, whenever there is in the stock market, everyone puts their prices. That is how stock market works, right? Stock market, let's suppose Infosys says my share is for 1,000 rupees. Someone says, I think Infosys, you are a very good company. Let us buy a share at I will give you 1,020 rupees. Someone says, no, I think you are a wonderful company. I'll give you 1,050 rupees for one share. People are bidding. The highest price the buyer is willing to pay in the stock market is the bid price. Everyone has to buy at that price then, right? So this is what the bid price is. Bonds, I think this has repeated. We have studied what a bond is. I gave you the example of marriage, right? Promissory note. What is broker and brokerage firm? The intermediary, the registered people, right? We studied about SEBI. SEBI was actually educating, formulating, training the intermediaries. Those intermediaries are brokers and brokerage firms. These are the people who actually help us. You, me, know what a share is, know which share to buy, might want to buy a share, but these are the people, the brokers, the brokerage firms, like the partnership firms or LLPs or private companies. They can be anything. So broker or brokerage firms actually help to buy and sell these securities, shares and debentures, right? These are actually the people who help us, who are the intermediaries in the stock exchange. This is what you should, they give you advice like buy this, buy that, you should sell this now, or buy this is something new you should buy. They give you advice, they help you in buying and selling. These are the brokers and brokerage firms. They charge some money, they charge some percentage of your profits, of your transactions for helping you, right? That is what broker and brokerage firms are, right? What is the bull market? We have discussed this in chapter 1, I think, right? Bull market is when people think the prices are going to go sky high. Everyone is positive. Everyone is positive in the stock market. That is a bull market, right? Everyone thinks each and every stock is going to go high. The stock market is going to go positive. That is a bull market, right? Okay. Next one is, what is a business day? A business day is the day on which stock markets are open. Monday to Friday, excluding public holidays. Stock markets work Monday to Friday, excluding public holidays. Stock markets do not work on Saturdays and Sundays, right? These are the days. Those are called business days. Monday to Friday, right? Monday to Friday and excluding public holidays, right? What is bid and offer? We just understood what is bid, right? What is offer? We also understood offer. Bid is the highest price someone is wanting to pay. Offer is the highest price or the lowest price or the price that the person is asking for it. We understood this in ask and offer, right? Ask and offer. This is same thing. Bid and offer. Ask and bid is the price someone is wanting to pay. Offer is the price someone is wanting to charge from you. Shopkeeper says, I will charge 10 rupees for this particular product. That is offer price. You say, I can give you 12 rupees. I think this is very good product. I will give you 12 rupees. That is a bid price, right? Bid and offer. As simple as that. What is a bonus? What is a bonus, right? Okay, I think there are a few questions. Bid is more like auction. Yes. Beta can be seen in different ways. It is more like a Greek word, right? So beta it can be more like. Give me a second. I'll tell you. I think I'm missing that thing. Correct. Right, it is the relationship between stock market of particular stock and movement. All right. So what they say is actually the difference, the movement. So beta can be seen as, let us suppose a share is growing, but the stock market is growing more. The share is growing at 3%, and the stock market is growing at 6%. So the beta is 3%. The difference between the growth rate, right? That is what beta is. So beta is like 3%, the stock or the security is growing, but the market is growing 6%. So 3%, the difference is beta, right? Coming to bonus. What is bonus? Bonus is free allotment of shares. It is like bonus what I'm giving you, like Diwali bonus, right? So it is like free allotment of shares. You have 10 shares, but the company is doing really good. Here are 2 more shares for you without any money, right? You do not have to pay more, but here are 2 extra shares. So that is what bonus is. Free allotment of shares made in proportion to existing shares. So what they do is for every person who has 1 share, we are issuing 1 more share. So that is a bonus. So every person who has, like a person has 1,000 shares, he or she is given 1,000 more shares without any money. Right? That is what bonus is. What is a commercial paper? Commercial paper is also, it's more like a promissory note. It is a short-term promissory note used by large firms, like huge, big, multi-million, multi-billion dollar organizations use commercial paper to borrow money on short term, right? For 1 month, for 2 months, for 3 months, for 15 days, for 10 days. I want $10 million. I want 1,000 crore rupees for next 10 days. I have a huge payment coming up. I have to pay 1,000 crore rupees. So I get this money through commercial paper. Some different organization will give me a commercial paper for 1,000 crores and I will take it as a loan and pay it back after 10 days, right? That is how commercial paper works. It is an unsecured short-term promissory note used by large firms, usually issued in 1 lakh or more, right? The denomination is 1 lakh or more. One commercial paper is minimum 1 lakh rupees. So, and you and me cannot deal in that. It is for huge organization, right? Okay. Coming to what is call option. Call option is an option to, it is option, not a buy. What I'm saying, it is an option, right? It is an option to buy a particular stock. So let us suppose I have an option. I say I take a call option that after 3 days, after 30 days, after 60 days, after 90 days, I will buy this stock whatever the price is. Okay. So take this rupee, or what I can say is take this 50 rupees. The stock today is 55 rupees. Take 56 rupees today, or whatever the price is after 60 days, you have to give me the share, right? That is the option. I might or might not buy. I have an option. I do not have a right, right? So that is what a call option is. I have an option to buy a particular stock at a specified price within a time period. Let's say 30 days or 60 days, right? That is a call option. I have an option to buy a particular security. I do have a right, but that is optionable. I might or might not buy, right? That is a call option. And for call option, when you buy, you pay a premium, you pay a charge for that, right? Because you are taking that benefit of whether buying or not. Let us suppose I'll give you an example. So someone, you go to someone, you come to me and you say that this is a pencil. This pencil is for 10 rupees, but hey, I'll buy it for 11 rupees. And I know this pencil is going to be of 15 rupees. After 90 days, in 3 months, the prices are going to increase, right? So what I say, but it is not fixed. There are chances that the prices might increase, right? So what I say is that the person comes and says, I'll buy it for 11 rupees. Whatever the price is after 90 days, you have to give me at 11 rupees. Now what I say is, okay, you buy it for 11 rupees, but you also give me 2 rupees extra, right? You also give me 2 rupees extra because I'm giving you an option to buy or not, right? After 90 days, the price of the pencil is only 9 rupees, right? The price of the pencil is only 9 rupees. The prices did not rise, they actually fell. Now this person comes to me and says, I don't want to buy the pencil. I thought this will be for 15 rupees, but this is only for 9 rupees. So instead of 11 rupees, I will not buy at all. I will not give you any money, right? So he has an option, but for that he paid me 2 rupees. So I earned 2 rupees sitting at home because he wanted an option to buy it for less money, right? So he had an option to buy or not, and I got that 2 rupees because I gave him that option. Whatever the price is, you come and buy. That is your option, but you give me 2 rupees because I'm giving you an option whether you buy or not, right? That is what call option is. Okay, coming to what is close price. The final price at which the stock is traded on a given particular day. Simple English, what is close price? The final price at which, when the market closes in the afternoon, right, the final price at which the stock is traded is called close price. What is capital budgeting? Capital budgeting is the is the planning of expenditure, right, of an asset whose cash flows are expected. Simple. Capital budgeting is, let us suppose, I know I have to build up an industry. Okay, I am an industrialist. I have to build a factory. I know this factory is going to cost me 100 crore rupees, but this cost will come in 10 years, right? In 10 years time, this factory will take 10 years to build, and the total cost will be 100 crore rupees. First year, I will spend 40 crores. Second year, 5 crores, then 5, 5, 2, 2, 3, 3, 3. And that is how my 100 crores will be spent, right? Now, while this factory is working, this factory starts gaining money as well, right? So that is what capital budgeting is. It is the process of planning your expenditure on asset whose cash flows are expected to extend beyond 1 year, right? I will have to spend a lot of money over 10 years, and I will also have some money coming in over these 10 years. So the entire capital budgeting is actually the planning of expenditure of an asset which is going to take more than 1 year, right? Like a factory, like a building, right? This is what capital budgeting is. Some huge project is going, like government is wanting to create roads in your city, right? So government says like, hey, this is what it is going to take me 3 years to build this road, and it is going to cost me 40 crore rupees. So it is an asset. It is an asset for the government, right? The road is an asset. Future toll money is going to come from it. So that is why the huge expenditure, capital expenditure, is going to extend in more than 1 year. The planning of that expenditure is called capital budgeting because it is capital expenditure. Expenditure on asset is capital expenditure. That is why it is capital budgeting. Budgeting is planning the expenses and the income is what budgeting is, right? Okay. Commercial paper is like a short-term loan used by very huge organizations and banks, right? Arm people like you and me, mango people like you and me are not even eligible, but therefore huge organizations and banks, it is short-term loan. That is what commercial paper is, right? Okay. What is your question, Ishita? I think I've answered most of the questions. Right, okay. Correct. The close price is the base price on the next day. Absolutely, yes. The timings of the stock markets, we'll come to that. We have that in terminology. Right. INR means Indian National Rupee. Right. INR is nothing but Indian National Rupee. Like USD is United States dollar. INR is Indian National Rupee. Right. Okay. Wonderful. Any questions I have left? I don't think so. Yeah, most of the questions are for the terms which are going to come, right? We just discussed call option and capital budgeting, Moksha. So Moksha, you can just go and revise it from the back. I think I made it clear. You can actually, while you're revising or looking at these lectures again, right? I'm very sure in the one go you will not understand. It took me 4 or 5 readings when I was understanding these concepts. I went to YouTube, I went to Google, because from the very definition or even from my example, it is very difficult to understand. These are very technical concepts, right? I'm very sure even if I explain it 10 times, this will be really difficult for you to understand. But if you keep listening, if you start making sense of what I just said, this will become easier. It is really difficult in the one go, I agree. You will not understand that in very first time when I'm speaking, I know. But what I'm doing is I am speaking and I'm telling you in a flow. While you go and revise, when this is there on internet, you can go and revise through these lectures. They are going to stay, right? So when you like listen again and again 2-3 times, then it starts making sense, right? So I'm very sure in the very first go you will not understand. Very honest, I also never understood these terms in the very first go. I went to YouTube and Google to understand, and that is where I'm bringing those examples from. That is what I understood, and I gave you examples, right, which are relevant to us. Perfect. Difference between bond and commercial paper. See, bond even I can buy. Commercial paper only big companies can buy. That is one of the major differences, right? Perfect. Coming to Capital gains yield. Yield is nothing but the return. Yield is nothing but the return. The capital gain during a year divided by beginning price. I paid 100 rupees and I sold it for 110 rupees. I paid 100 rupees, I sold it for 110 rupees. What is my yield? 10%. As simple as that. I bought it for 100 rupees, sold it for 110 rupees. 10 rupees is my gain, that is 10 rupees on 100 rupees. That is 10%. My capital gains yield is 10%. As simple as that. The return on investment, the return on the actual price paid, the purchasing price, the return on the purchasing price is yield. As simple as that. Okay, what are commodities? Shares are shares of the company. Debentures are debentures of a company. But what is a commodity? Commodity are like silver, gold, agriculture product. You must have heard people actually like buy gold, commodities or silver. They actually play on gold and silver. They actually hedge. They actually in the commodities market. Like there is a stock market, there is a commodity market, right? There is a commodity market like a stock market where there are trading of gold. People say, I bought 100 kgs of gold. Give me 100 kgs of gold. Give me 1000 kgs of silver. Now what they're doing is they're not buying gold. What they're doing is they're just saying whatever is the difference in the price is my gain or loss, right? What do I mean by that? As simple as that. The gold price, let us suppose, is 50,000 rupees per 10 grams. So I say, give me 100 grams. That means 5 lakh rupees, right? So I put 5 lakh rupees, but I'm not paying it. After 30 days, I say, sell my 100 grams. Now the price is 52,000 rupees. So I gained 2,000 rupees on 10 grams. That means 20,000 rupees on 100 grams, right? That is how commodity markets work. That is what a commodity is. Commodity is a product which is used as a commerce that is traded on a commodity market like silver or gold. People also trade on rice, wheat, on agriculture products, on dal. Like the people are actually out there, they're saying on moong ki dal or on arhar dal or on wheat or on rice. Like today the rice, the wholesale price of rice is, let's suppose they say 30 rupees kg is the wholesale price of rice. So give me 1 lakh kg of rice, right? Tomorrow, whatever the price is, I'll sell that 1 lakh kgs. Whatever is the difference is my gain and loss. That is how people play on commodities. That is what commodities are. They are like shares and debentures, but they're traded like that, but they are actually on a commodity, on a product, like silver, gold, or agriculture product, right? What are convertible securities? I buy a debenture, I buy a bond, I want to convert it into shares, right? Now, convertible debenture, convertible bonds. A company says like, hey, this is a bond. I'm giving you a bond of 3 years, right? You buy a bond of 3 years, but after 2 years, you can convert it into shares of my company, right? This is what a convertible security is. I buy a bond, but I buy a bond of 3 years, but after 2 years, I can convert it into a share of the company, right? He says, instead of giving your money back, you take shares of my company, right? That is what a convertible security is. Instead of giving the money back, what they say is, you buy shares or you take debentures of my company, right? This is what a convertible security is. Similarly, shares, like they can be convertible shares, which are very rare, but it is more in bonds and debentures and preference shares, right? This is more relevant in that. So they say that buy debentures of our company. We are selling you debentures. After 2 years, convert these debentures into shares. Okay, that is what a convertible security is. What are debentures? I just said you buy debentures, convert it into shares. What are debentures? Debentures are like a debt instrument, right? They are not shares. They are not giving ownership. Like shares are actually giving ownership of the company. But debenture is not giving ownership. It is just like loan from the public. If a company wants to take loan from the public, it issues debentures, right? I'll take up all the questions, right? If you have a lot of questions, I'll take up those questions because the flow would stop if I start answering the questions now, right? Okay, so debentures, focus on what is on the screen and what I'm talking, right? Note down your doubts somewhere in the last 20 minutes or something. We'll discuss the doubts very quickly. right? There are a lot of terminologies. We have to complete this. So bear with me. Okay, so debentures are debt instruments which do not give ownership, but they are a way of taking loan from the public, right? They are a way of taking loan from the public. It is a debt instrument that company says that we are issuing debentures for 1 lakh crore rupees. So people come and buy that debenture. It is like they pay money to the company, and company has to repay that after 3 or 5 years. The company has to repay that money after 3 or 5 years with interest, right? That is what a debenture is. They're not giving the ownership, but they're just taking loan from the public in form of debenture, right? What is a defensive stock? Defensive stock is nothing but a stock, a share, which gives you constant dividends, right? Like TCS, the shares of TCS give you constant dividends. It is a really good company which is doing really good in the stock market in performance, right? So it gives constant dividends. It gives regular dividends to its shareholders. So it is a defensive stock. TCS is a defensive stock because it gives regular dividends. It gives constant dividends to the shareholders, right? That is why we term it as a defensive stock. A stock, a share, which is giving constant dividends to the investors, to the shareholders, right? That is what a defensive stock is. Okay. What are derivatives, right? What a very huge term. Like this is an entire chapter. We have an entire chapter on derivatives in the final level of chartered accountancy, right? Where we study about it. But very briefly, I'll tell you what a derivative is. Let us suppose you and me are trading, okay? Let us suppose you and me are trading, right? And I say it will rain tomorrow, but you say it will not rain tomorrow, okay? Like, listen to the example very carefully. I say it will rain tomorrow. You say it will not rain tomorrow. I tell you, okay, if it rains tomorrow, you give me 10 rupees. If it does not rain tomorrow, right, I give you 10 rupees, right? I say it will rain tomorrow. You say it will not rain tomorrow. I say, okay, if it rains tomorrow, you give me 10 rupees. You say, I know it is not going to rain tomorrow. And if it does not rain, you give me 10 rupees, right? Now, rain here, this entire transaction becomes a derivative. How? A derivative is a securities whose price is derived by one or more underlying asset, right? So a derivative is nothing but which derives its value from an underlying asset, from an underlying thing. Now, asset, I just talked about rain. Now, similarly, talk about a share, right? I say tomorrow the share of XYZ company is going to become 30 rupees. Right? You say the share is going to become 29 rupees. I say, okay, if it becomes 30 rupees, you give me 1 rupee. If it becomes 29 rupees, I'll give you 1 rupee, right? So this is a derivative instrument. We are trading on a share, but we are not actually buying the share. We are not buying the share. We are not going to touch the share, right? But we are trading based on that share, based on the value of that share, right? This is what derivative is. As simple as that. You do not have to understand anything else. Now, derivative can either be commodity on gold price. It can be based on currencies, India versus USD, what will be the rate, or on interest rate. Tomorrow, the interest rate in USA will be this. You say the interest rate will be this. And we start trading on that. That is a derivative. Or we start trading on indexes like Sensex or Nifty, right? What I said, it is like a thermometer of securities market. So you say Sensex tomorrow will be 12,000 points. I say no, it is going to be 12,500 points, right? We start trading on that. We start giving each other money on that. We start betting on that. That is what a derivative is, right? We are not actually going to buy gold. We are not actually going to buy the share. We are not actually going to buy the currency, but we are trading based on the value of that share, value of that gold, value of that currency. That is what a derivative is. As simple as that. Okay, what is hedging? What is hedging? Hedging is nothing but minimizing your risk, right? You do not have to get into the technicality at this point in time. Hedging is nothing but minimizing your risk, right? Simple example, you are cycling, you put knee pads, right? You are cycling, you put knee pads by cycling, you are hedging yourself against accident. In the stock market, I hedge myself through shares or through I reduce my risk through currency, right? For example, I say I am going to buy 1,000 US dollars tomorrow. I know I think the US price is going to fall. It is risky for me. What I do is I sell US dollars also, right? I say I'll buy US dollars. I'll also sell US dollars. So I start hedging. I start reducing my risk. Do not have to go into technicalities. Reducing and minimizing your risk is called hedging. As simple as that. Okay. What is an index? I just told you. Index is like anything which tells you how good or bad particular stock or particular market is doing. It is like a thermometer. It is telling you, is it a fever? Are you doing good? Are you healthy or you are unhealthy? Right? That is what an index is. Index can be anything. You also have coronavirus indexes these days, right? These are the cases growing. These are the cases falling. These are the death rate. This is the death rate going down. Coronavirus index. Index is nothing but giving you a bird's eye view of whether it is in the good position or in the bad position. That is what an index does, right? I'll see if I have any questions. Betting for cricket is not allowed, but it is kind of a derivative, right? The essence of derivative is that whether it is legal or not, we have to check, right? That is, we have to see the legality also, but you got the concept right. What are the questions I'm missing? There could be that debentures are converted into shares, right? Instead of giving the money, they say buy the shares, you get the shares, and it is on you whether you want to sell the shares or not. If you think you want to sell the shares and get the money, right? Got it. Okay. Absolutely, you have to learn, Tejashri, you have to learn each and every topic from the chapter. I'm just focusing on one which are more technical. The study material has a lot of more like terms, so you have to go through each of those. I think most of the ones which I have not covered are comparatively easy, right? Close price and closing price, I don't think so there is any difference, right? Not what I'm aware of. Closing price and close price are one and the same thing. Could be different. I don't think so. Like, as far as my knowledge is concerned, I think they're one and the same. I could be wrong, right? Let us go to limit order. What is limit order? An order to buy or sell a share at a specified price. That is what a limit order is. An order to buy or sell. I say whatever the price is there in the market, as soon as the price of the share is 100 rupees, I will buy or sell it. Whatever I want, decide, right? If it's 99, I won't. If it's 101, I won't. I don't want to earn more money. I don't want to lose more money, right? Whenever it becomes 100 rupees, I'll buy or sell. That is limit order. I fix a price to buy and sell. I'm not greedy. I don't want to make more money. 105, 110. No, I do not even want to lose more money at 19 or 98. I just say as soon as it is 100, I'll buy or sell. That is limit order, right? Market capitalization is as simple as market price into number of outstanding shares. Market price of one share into the number of shares in the market is market capitalization, right? One of the biggest market capitalizations in our country right now is of Reliance Industries Limited, right? The number of shares into the market price of per share is market capitalization. Very simple formula. Mutual funds are nothing but a lot of people bringing their money together. And some particular, that mutual fund is actually investing on their behalf, right? Let's suppose we are 300 people right now. All of us put in 10,000 rupees each, right? And this becomes 30 lakh rupees. So 30 lakh rupees is what we'll give to a mutual fund. We'll give to a team of professionals, and they will invest that money for us. That is what a mutual fund is. Mutual means together. Fund means pooling in money. So a mutual fund is like many people pooling their money into one fund, and some of the professionals handling investments for us, right? They are working for us and they charge money for that. That is what a mutual fund is. Out of the money, right? Out of the money is for call options that we understood. This money stock price is below the strike price. This is very technical. I don't think like it will take me another 1 hour to explain. out of the money, what we can do is, if I find time, I'll explain this at the end. Right? This is really interesting, but it will take a lot of time. Okay, so pre-opening session. From 9 a.m. the market starts working on Monday to Friday, but 9 to 9:15 is the pre-opening session. 15 minutes is the session where the badla is transacted. Like we heard about badla, right? To take over that transaction to the next day. So this is the pre-opening session where the badla transaction takes place, right? This is the session where badla takes place. The 15 minutes, 9 a.m. to 9:15, is where badla transactions, cancellations, modifications take place. Every morning, 9 a.m. the market opens, and those 15 minutes are the opening session, right? Price earning ratio, PE ratio, one of the best things that a chartered accountant or anyone who wants to invest in share market should know, right? It is nothing but the market price of the share to the dividend earning per share, dividend earned per share. That is price earning ratio. Simple formula is market price divided by the dividend per share, right? The dividend earned per share. That is PE ratio. The higher the PE ratio, the better the share is, right? Put option. The call option was an option to buy, right? The put option is an option to sell. Simple, I gave you an example of call. I have an option to buy it. Whether that person who was buying that pencil from me, he had an option to buy or not to buy, right? Similarly, if I had the option to sell or not to sell, that would be a put option, right? Call option is whether to buy or not to buy. Put option is whether to sell or not to sell. If I had an option to sell or not to sell, right, that would become a put option, because he or she had an option to buy this pencil from me. Whether to buy or not, they had an option. That was a call option. If I had an option to sell or not to sell, that is a put option, right? Stock split is nothing but dividing the stock. One share, the face value is 10 rupees. They split it into 10 shares of 1 rupee each. That is stock split, as simple as that. One share, the face value is 10 rupees. Now the company says, let us split these shares into 10 shares of 1 rupee each. Why do they do this? They do this to increase their market capitalization, right? Because market capitalization is the market price of the share into number of shares, right? So when the number of shares increases, the market capitalization increases. So stock split is nothing but dividing one share into small different shares. One share 10 rupee face value, it becomes 10 shares of 1 rupee face value each. That is stock split. Split means dividing into smaller pieces. What is thin market? Thin market is a market in which there are comparatively low number of bids to buy and offer to sell, right? A market where less people transact in these markets. These are thin markets. Some of the shares are where people want to buy a lot of shares. That good companies, a lot of people want to buy those shares. But thin markets are markets where people are not much people want to transact in those shares and in those markets. That is what a thin market is, right? Not many people are there in this market. That is a thin market. As simple as that, right? Final one, return on investment. I invest 1,000 rupees. How much money am I going to earn out of this 1,000 rupees? Right? That is return on investment. I invest 1,000 rupees anywhere, be it currency, be it stock market, be it debenture, be it bank, be it fixed deposit, be it property, be it cash, be it anything. If I invest certain amount of money, what is the return I'm getting out of that investment? Is return on investment. Return on equity is how much money am I getting out of the shares, right? It is a subset of return on investment. Investment can be in equity, can be in property, can be in capital, can be in debenture, can be in currency, can be derivative, can be this, can be that, right? Can be investment in MBA, can be investment in chartered accountancy course. You are investing, let us suppose, 50,000 rupees in chartered accountancy in course. You are investing. How much would you earn? You will earn lakhs of rupees, right? The return on investment is huge, right? So, but return on equity is return on particular shares, right? How much is the money you're going to get out of equity, out of your investment in shares, right? Return on invested capital is usually the net profit after taxes. Like invested capital is long-term debt, like for example, debentures or your fixed deposits or government bonds. So that is the return on invested capital, right? Equity is shares, invested capital is debentures or bonds, right? Those are not equity. Those are not giving you ownership of the company. Equity is giving you ownership of the company, like shares. But capital, bonds and debentures are not giving you ownership of the capital. They are just as loans from the general public for the company, right? They're not giving you ownership, just taking money from you as loan, right? Return on asset, as the word says, I invest certain money in an asset. What is the money I'm going to earn out of this asset is the return on assets, right? Okay. I think this is the final slide. Trading session 9:15 to 3:30 p.m. What is the trading time? Most of you were asking what is the time of trading. Mondays to Fridays, 9 to 3:30, but 9 to 9:15 is pre-session, right? 9 to 9:15 is pre-session. From 9:15 till 3:30 p.m., it is the trading session in the stock market. At 3:30 p.m., there is a bell, there is a hammer, and the market stops working for that particular day, right? That is what a trading session is. Yield, we talked about what is yield. Yield is just the return. Like for example, gave you an example, 100 rupees, and I got 5 rupees of dividend from that 100 rupees of shares. So 5% is my stock yield, right? I paid 100 rupees for a share. They gave me 5 rupees dividend. So 5% is my yield. What is the return on that? The return is called yield. Yield is nothing but the return on anything, right? Zero coupon bond. Wonderful concept. Simple example, right, to make you understand. Zero coupon bond is like, listen to it carefully. Now a bond, a company says this bond is for rupees 100. Okay. Now this bond is for rupees 100, but we will not, you give me 100 rupees, you buy this bond from me, and after 3 years, I will return this money to you. Okay. Now the company says, I'm not going to give you any interest. Zero coupon. Coupon means interest rate. Coupon means interest rate. Coupon means interest rate. Zero coupon. There will be no interest rate. You give me 100 rupees today. Right, after 3 years, I will return this money to you. But because there is no interest, the company says, instead of 100, you give me 95 rupees today. Right? You give me 95 rupees today. After 3 years, I will give you 100 rupees. I will not give you any interest, but I will give you 5 rupees extra after 3 years. Right? This thing is for 100 rupees, but you give me only 95 rupees. After 3 or 5 years, I will give you 100 rupees, right? So this 5 rupees is what I earn in 3 years, right? I'm not getting any interest, but I'm earning 5 rupees, right? I'm earning 5 rupees without any interest. So zero coupon bond is, there is no interest rate, but we get this bond at a less price than what its value is, right? As simple, right? So I think this is a really simple concept. Betting is not allowed because this is not safe for the economy, right? If I'll give you a simple example, if you tell your parents today that you don't want to study, you want to do betting, will they allow? Ask them why won't they allow. You will get your answer why betting is not allowed. Okay. Sensex is not a company, it is just an index. Yes. Mutual funds is similar to investing into shares, but mutual funds also invest into debentures and bonds on your behalf, on your money, right? Okay, what are the questions I'm missing? I think the screen is not refreshing, so maybe I'm missing up the questions. So excuse for that. I'm really sorry if that's happening, right? No, Gauri, I just saw your question. It is derivative is more like gaining a transaction on a what can I say, an underlying asset, right? Is it a wagering agreement is debatable, right? So it is debatable whether it is a wagering transaction or not. In the purest form, it is not. I can assure you that. In the purest form, what a derivative is, it is not a wagering agreement. It is more of transaction based on something else, right? Maybe an uncertain event for sure. For sure, it is an uncertain event. But then again, the value of that uncertain event has to be there, right? A wagering agreement might not have a monetary value attached to it. Rate of Bitcoins, you'll have to Google, sir. I have no answer to that. Pre-session, the badla, right? We just talked about badla happens in the next day, in the next session. That is what happens in the next session. Badla in those 15 minutes, any cancellations, any modifications from the last day, if someone wants to do, that is what happens in the first 15 minutes of the trading day, right? Okay. Moving on to the marketing terminologies. We are like any doubts or any things, I think most of them have covered, and I'm very confident, like somehow I'm very confident if you go and revise this, when you see this lecture again, you will understand each and every concept much better. It is really difficult to understand in one go. Honestly, it is really difficult. Like sometimes even I get confused in these concepts even today, right? So getting it right in the first attempt, in the first go, is really difficult. So I would really want you to like watch it once again. You still have doubts, maybe go over the internet and find, if you find something debatable or you still don't understand, right? So you can do that. That's exactly open. It is more about getting the concept right? Okay, so focusing now on the marketing terminology, right? The marketing is more about how you market your product or service. Right? That is what marketing is all about. Right? Okay, coming to the first term of marketing. The focus is, ma'ams and sirs, the focus is now on marketing. Any doubts on the share market, on the finance side? That is what I said. Go back and you will see, when you listen to the lecture again, when you revise it, it will make sense. I'm very sure it will make sense, right? Okay, we are short of time. We have to cover a lot of things. I will have to rush, I think, but we'll cover most of it. After sales service is nothing but after you sell something, you give after sales service, like warranty, guarantee, repairs. That is after sales service. I know everyone knows what is after sales service. You sell something. After you have sold something, you give that service is after sales. You sell a product, they sell you a fridge. After 3 or 4 months, they come and repair it. That is after sales service. Barriers to trade. Barriers to trade are some things that stop people from doing business, right? For example, India banning Tencent for PUBG, right? Or TikTok is banned. That is a barrier to trade. That is a barrier to trade for those companies. They are being stopped from doing business. It can be in nation's benefit, but these are barriers to trade. Something that stops from doing business, right? Similarly, barriers to entry and exit are more business related, right? Barriers to entry and exit are, for example, I am an existing player in the market and I do not want you to enter this market. What will I do? I will do that all my transportation people, all my logistics people, I will say that, okay, this new company is coming, they might come and approach you, but you do not have to work with them because I'm going to give you more benefit. Or I have that, I'll spread more product, I'll start advertising more, or I'll bring down my prices, right? While being legal, I'll do that. So that becomes a barrier to entry for new companies. Similarly, barriers to exit is, for example, I have invested, I'm a startup and I invest 10 crore rupees in my company. Now, it is not easy for me to end that. Yep, I think we were talking about, yes, I think, I'm really sorry for the technical glitch. So we were talking about barriers to entry and exit, right? So barriers to entry and exit are nothing but like companies not able to enter a market or being able to exit from the market. That is what barriers to entry and exit are, right? There can be multiple things. This is actually discussed at the intermediate level very much in depth, right? So this is actually discussed very much in depth at the intermediate level. But to understand the concept, when a company is not able to enter a market, right? When a company is not able to exit a market, that is what a barrier to entry or exit is, right? Okay, yes. I just gave you an email ID in the beginning where you can send your doubts. At the end also, I have that email ID mentioned. So you can send all your doubts there, whatever is not clear, right? We're short on time, but whatever doubts you have, you can send that over to that email ID. We will just rush with the concept so that we have some time for discussing the doubts. Okay, benchmarking is nothing but as simple as, I'll give you a quick example on benchmarking, right? Benchmarking is nothing but comparing. Simple understanding is benchmarking is comparing, right? If I'm comparing my product and service with that of my competitor, that is benchmarking, right? The huge definition talks about that only. Benchmarking is comparing. Benchmarking is comparing so that I become better than my competitor, right? The idea is to become better than my competitor, and for that, I compare my product and service. That is benchmarking. What is brand equity, right? The question comes, what is brand equity? Example on the screen, Ranveer Singh or MS Dhoni, Mahendra Singh Dhoni, Ranveer Singh, they have brand equity. If they tell you that this product is good, if they tell you that this product is good, or go and buy this product, or this is what I do, or this is the service I take, a lot of people would want to go and do that. A lot of people would want to go and buy that product because they have a brand equity. They have the brand loyalty, right? They have awareness. They are ensuring quality of things to the customers, right? That is what brand equity is all about. That it makes the customer loyal. It makes the customer more inclined and aware of the product, right? Okay. Yes, it is back, I think so. Right. Okay. Talking about brand loyalty. What is brand loyalty? Now, I or you might be very loyal to a particular brand, right? We only eat Maggie, we don't eat Yippee. For example, I'm giving you an example. Let us suppose you only eat Maggie and you do not like Yippee. So you have a brand loyalty for Maggie, right? That is what brand loyalty. You're loyal to that particular brand. Brand recognition is that customer recognizes that brand. If today I go and tell you that Adidas, right? Everyone knows what Adidas is. What does Adidas do, right? It is a sports brand. It is a fashion brand. It is into clothing and into sports, right? So everyone knows what Adidas does. That is brand recognition. The brand has a recognition in the market. What is a brand? Brand is nothing but something that is actually representing a business. Brand is something that is representing the business, right? Like this is a brand, for example. Everything is a brand, right? Everything these days is a brand. If you have earphones of Bose or Boat, or you have Virat Kohli coming for some of the products, or you have some other actor coming in some of the products, like Shah Rukh Khan coming for Byju's. That is a brand. We know Byju's is a brand. It is actually defining the business, right? What is a business model? Business model is nothing but how the business is actually structured. This is also actually discussed at the intermediate level. We are just trying to understand what it is, but all these things are there at intermediate level in depth, right? So that is why this is a foundation course. This is the basement. You are being made a foundation here so that you learn better, you learn more in detail at further levels, right? So a business model is how the company actually works, how an organization is actually structured is a business model, right? Conglomerate. We have been studying, we have been having a lot of doubts. What is a conglomerate? Is nothing but a group of many companies which are diversified, which might not be even in the same business. Like Tata. Tata is a conglomerate. It makes salt, Tata Motors, trucks, Tata cars, Tata Indicom, Tata Starbucks, Tata this, Tata that. Tata is a conglomerate. It has a lot of businesses, small, big businesses, which are not related to each other. That is a conglomerate. Whereas a consortium is a combination of several companies for a same business. for a same purpose. That is a consortium, right? Conglomerate, different businesses, different from each other under one umbrella is conglomerate. Consortium is several companies for the same product, same service, same purpose is consortium, right? Corporate culture is culture of the organization, culture of the organization where you work or organization that is actually working, the internal culture, how do people treat. So there can be an internal culture that everyone is like, if you go to corporate, the corporate culture is we do not say ma'ams and sirs anymore, right? In corporate culture, we do not say ma'ams and sirs. We talk to people with their name. Even if that particular individual is of 60 years, you will call them by name like Mr. Sharma, or you will say, hi Aditya, how are you? That Aditya can be of 60 years, but that is how it is. That is what a corporate culture is, right? Cross-selling. What is a cross-selling? The cross-selling is nothing but selling small products of the same thing to the customer. Say, example on the screen, selling a car alarm and music system to new car buyers, right? Maruti Suzuki says, very good, you bought Maruti Swift, very good, take this car out of the showroom, congratulations. After 2 days, they'll call you, sir, do you want to buy Maruti's music system for 50,000 rupees? This is cross-selling, right? They're not selling you as a bundle, but after you have purchased something, they're selling you something related to that product, right? Tata Consultancy is not a conglomerate, it is a part of Tata, which is a conglomerate, right? Okay, wonderful. Lakshmi, the difference between brand equity and what? Difference can always be between two things, right? I see a lot of you ask questions, difference between this. The difference can only be between two things. So you have to tell me what are the two things you want to know difference between, right? We understood cross-selling. The next one is differentiation. What is differentiation? Differentiation is a marketing strategy. Differentiation is a marketing strategy where you become different from others. Simple example, you are a chartered accountant, but you also know how to speak Japanese, right? This is differentiation. We all are going to become chartered accountants, but 2 or 3 of you know how to speak Japanese, right? This is differentiation. This is what differentiation is all about, right? Okay, direct marketing. Knock, knock, ting tong, hello sir, please buy Surf Excel. This is direct marketing. Straight out selling the product. That is direct marketing. Knock on the door, please buy Surf Excel, please buy this, please buy cooker, please buy this particular utensil. Direct marketing. Okay, what is distribution channel? Distribution channel is the network of making your product or service available, right? Okay. Yes, you have negative marking system. I just saw the question. Okay, so distribution channel is, for example, you go to any single village in India. Go to any single village in India, you will see a packet of Lay's and Pepsi in every shop because they have a distribution channel. Their product and services are available everywhere in the world. Like, that is a wonderful distribution channel. That is what a distribution channel is, a network which allows you to make available your product to the largest amount of customers. That is what distribution channel is, right? Forecasting. Forecasting is process of estimating the future. Not expecting, but estimating, right? Everyone wants their future to be the best, and it should be that way. But forecasting is estimating the future. For example, you are forecasting in the next 4 years, you are going to become a chartered accountant, right? Forecasting, as simple as that. Future. In terms of marketing, the estimating the future demands of the customer is forecasting. After 6 months, I know coronavirus is there. Me as a business, I might think, okay, like after 6 months, people might want to travel a lot. So let me open a travel agency today that after 6 months, there will be a boom in travel. So let me open a travel agency today. That is forecasting. That is forecasting. Internal marketing, right? Internal marketing, selling the corporate culture, selling your product within the organization. Because let us suppose you have a company with 10 people, you have a product, and you have to make those 10 people within the company also to trust the product, right? That people should also, the people who are working in the organization should also trust The product, they should also be able to be confident of the product. That is internal marketing. You have to market that product within yourself as well, right? You have to also be careful. You have to sell that product or build trust within that team as well, right? Give me a second, please. Right. Okay. E-tailer is nothing but e-commerce, e-retailer. Amazon is an e-tailer. Right. Okay. Wonderful. Coming straight forward to joint ventures, we have discussed this in detail. Different companies coming together to work for a purpose, not consortium. Consortium has a lot of small companies. Joint venture is one or two at max, right? A third party commercial operation established by two or more. Maximum two or three you will see in joint ventures, right? Like Tata Starbucks is a joint venture. Tata and Starbucks have joined hands to sell coffee in India. That is joint venture, right? Market segmentation, like dividing consumers into different groups, like teenagers, old people, young people. So you have different segments. You're dividing the market into different segments is market segmentation. Dividing the consumers into different segments, right? Marketing mix, all those who have studied business studies or those from the science, you know what are the 4 P's of marketing: product, price, place, and promotion. The 4 P's is marketing mix. Every company, every marketing team has to take care about 4 P's of marketing: product, price, place, and promotion. What is the product? What should be the price? Where all can we sell this and how to sell this, right? The 4 P's: product, price, place, and promotion, right? Okay, merger. Merger is considered to be a process when 2 or more companies come together and form a business, right? They merge. Joint venture is they work together. Merger is they eat up. Like one company eats up the other company. They merge into it, right? Let me give you an example. This is a company. This is a company. These are joint venture. They are joined together, right? Wherever this is a company and this is a company and it merges. This is a merger. If you can understand it with this company, they are joined together and working, but this company is merged into it and working. Merger and joint venture, right? Okay, what is the mission? What is the vision? I have this at last. We will discuss that. Coming to niche marketing. Niche marketing is actually refers to a very small group, right? For example, whey protein can only be sold to people who are going to gyms, right? That is niche marketing. Like there's a small group to whom we can market that particular product, right? Very small, specific group of people. Personal selling. Personal selling is nothing but it is like me selling this product to you. Please buy this pencil because I think this pencil is very good. I have cleared all my exams from this pencil. Buy this pencil from me. I am personally selling this product to you. So this is personal selling, building a relation first, telling you that, hey, like, see, I have also passed these examinations. Wow, so this might also benefit you. So I'm building a personal relation and selling this product. So this is what personal selling is all about, right? Okay, coming to preemptive pricing. What is preemptive pricing? Is setting low prices in order to discourage potential new companies or suppliers to market, right? Preemptive is a trick that I dropped on. Jio did a preemptive pricing, as simple as that. Jio, when came into the market, did a preemptive pricing, which setting very low prices in the beginning so that suppliers or the consumers get the best benefit and the competition is out. It is preemptive pricing, right? Setting prices very low. Price discrimination, when it charges different prices for different groups of consumers for the same good or services. Price discrimination is, for example, I am selling the same product for rupees 10 in an area which is nearby slums, right? Let us take market. Let us talk about like a small town. Let us suppose I am selling the same water bottle in a small town for rupees 50, but I am selling this same product in Mumbai for 120 rupees. Right? This is price discrimination. This is a strategy. This is a marketing strategy because people in Mumbai can spend more. So for the same thing, I will charge more, right? This is price discrimination. Price elasticity of demand. This means as the demand grows, the price increases. Demand goes down, price goes down. Simple price and price elasticity, we have studied this in economics, right? Most of us would have. Simple logic is The more the demand, the more the price, because people are demanding more. I want more this, I want more this. So company says, all right, I will charge more because you are asking more for it, then pay more for it. So the more the demand, less the supply, more the price. Then less the demand and more people are making it, but less people are asking for it, so the prices will fall. This is price elasticity of demand, right? Price sensitivity is also that customer is sensitive to price. Tomorrow, if I say this pencil is for 200 rupees, so no one is going to buy this, right? You say this pencil is for 8 rupees, everyone would be able to buy this, would want to buy this. This is price sensitivity. If I increase the price, consumers will not buy my product. Price sensitivity. This pencil becomes 200 rupees, no one is going to buy. Price sensitive consumers, right? Price skimming is charging relatively higher prices for short time, right? I say this is a very new pencil. You do not have to sharpen this for 2 months, right? And hence, instead of 8 rupees, I sell it for 15 rupees. This is price skimming because you have something new, because you have something innovative. In the beginning, you charge a higher price, right? That is price skimming. Because there is something new, there is some innovation, you charge higher price in the beginning. Then we have unique selling proposition, that is USP. A unique selling proposition, something very unique to your product is unique selling proposition, right? So this is where we end marketing terminology. Let us straightforward get into banking terminology, right? Accepting house. Accepting house is a banking or a finance organization, right? It is a banking or finance organization that specializes in service of acceptance. What do you mean by that? So, like I give a check to a bank, so this is an accepting house which says, all right, this check is part. The technical part, you don't have to go into the working of a bank, but there is a particular house, there is a particular banking organization which is actually accepting that money and approving that money, right? So accrued interest is again an accounting concept. I think most of you understand what accrued interest is. Annuities we have discussed in financial markets, right? Automated teller machine. Who even doesn't know ATM? You swipe a card, you get money out of ATM. ATM is automated teller machine. The full form of ATM is automated teller machine. Those huge boxes, you put your card, you get the money out. That is automated teller machine, ATM, right? Bridge financing. Okay, so what is bridge financing? Bridge financing is nothing but when I take a short-term loan, I take a long-term loan, all right? So let us suppose I'm an individual, I take a short-term loan of, let's suppose 9 months, and I take a long-term loan of 1 year. But after the 9 months end, my long-term loan starts from 1 year, right? So this gap of 3 months is where I need extra loan, right? I took a short loan of 9 months and my long-term loan starts after 1 year, right? So this gap of 3 months is where I need a short loan, and that is bridge financing. I'm bridging the gap between these two loans, right? That is what bridge financing is. A short-term loan that is actually bridging the gap between two loans, short-term and long-term, right? Bounce check. Everyone knows what a bounce check is. If there is no money in your bank, or if there is a technical glitch and the bank and the check is not accepted by the accepting house, if the bank check is not accepted by the accepting house because there is insufficient balance in your account or there is some technical error, it is said that the check has bounced, right? It is called bounced check. Bounce. It has gone out. It is not accepted. It has bounced out of the system. It has bounced back from the system. That is why we say bounced check, right? Cap. Cap is anything which is the upper limit or the lower limit, right? Cap is the limit that regulates the increase or decrease in rate of interest, right? If I say the cap of interest is 12%, that means there will be no interest more than 12%. It can be 11, it can be 10.5, it can be 11.5, but it cannot be more than 12. If there is a cap of 12%, that means the maximum interest rate that can be charged is 12%. Maximum or minimum cap. Maximum cap, minimum cap, right? Cap is the upper or the lowermost limit. Okay. Similarly, the clearing house, like we have accepting house, when the accepting house accepts it, it goes to the clearing house. In a bank, check is deposited, it goes to the accepting house which says, okay, everything in this check is okay, we accept this check. It goes to the clearing house. Clearing house says, okay, whether you have money, like is this bank okay, is this actually legitimate check, can this money be paid, and then they clear it. So this is clearing house of the banking. Don't be scared about the technical part, what happens in the bank, what happens, don't be scared, just understand that that is a process. You enter a check, it gets accepted, it gets cleared, and then it passes on. And then you get the money or you deposit the money, right? That is just a process. So what is a compound interest? I think like students of finance, students of chartered accountancy, even people from science background know what is compound interest, right? Interest on interest is compound interest. Interest on interest is compound interest. It is one of the biggest money-making schemes in finance, compound interest, right? What is a debit card? Debit card and credit card. I'll just explain debit card and credit card. Debit card is a card from which you can spend money when there is money in your account. If you have money in your account, you can use debit card and spend that money. Credit card is you do not have any money in your account, still you can spend that money on credit, on loan, right? That is credit card. As simple as that. Debit card is you have money in your account and you use that money to spend. Credit card is you do not have any money in your account, but still you spend that money through the account on credit, means on loan. That is credit card. What is a deposit slip? When you deposit money in the bank, they make you fill a deposit slip. Any of you, if you have gone to banks ever, right? If you deposit money or check, they give you a deposit slip. It is nothing but a paper, small, long paper, where you have to fill the details of the check, of how much money I'm depositing, which bank account, what is my name, what is my PAN number, right? It is just a deposit slip which you have to fill when you deposit your money or check in the bank, right? Debt recovery, right? Debt recovery is that getting money from people from whom your friend took 1,000 rupees from you. You are pushing them, give me my 1,000 rupees back. I want my 1,000 rupees back. This is debt recovery. You are recovering your debt. You're recovering your money which you have given to someone else. So banks, when they recover the loan, that is called debt recovery, right? E-cash. What is e-cash? UPI, Bheem, Google Pay, Paytm, digital cash, net banking. All these electronic forms of cash is called e-cash, right? I don't think any e-cash. Electronic money, electronic cash is e-cash. What is earnest money deposit? It is nothing but token money, right? Earnest money deposited is token money. Let us suppose I go and I want to buy a house. So I say this house is for, let's suppose, 50 lakh rupees. So I say, okay, here keep 2 lakh rupees and we will transact this after 1 month. I will give you the entire money after 1 month, but please do not sell it to anyone else. So keep 2 lakh rupees. That is earnest money deposit. That is token money. Similarly, in banking, right, a buyer to the potential seller of real estate initial stages is earnest money. Similarly, like even the example is given from real estate, right? Token money, so that we assure the key, this is ours, this is an advance money, so that we assure that this something is ours now. We will pay you the balance amount later, right? That is earnest money deposit, token money, right? Guarantor. What is a guarantor? Guarantor is nothing but who says that even if you fail to pay the money, I will pay the money. Let us suppose you go to a bank and you say, like, give me a loan of 10 lakh rupees. So bank says, okay, I'll give you 10 lakh rupees, but what if you don't pay, right? Then you bring in your father or your mother and they say, all right, if they don't pay, we will pay you, right? So then your father or mother becomes the guarantor, right? They become the guarantor. They're giving guarantee that if you don't pay, they will have to pay. That is a guarantor, right? Okay, what is next? Next is letter of credit. Letter of credit is nothing but it is more like it is two banks, right? It is more or it is between banks and importer. So an importer, just like we talked about guarantor, letter of credit is a guarantee by the bank to the importer or exporter, right? Someone is getting their product from China, let us suppose, right? So they say to the Chinese company, they say, I will pay you this money in 2 weeks, right? Chinese businessman says, what if you don't pay? Then they say, okay, if I don't pay, this bank will pay you. Now the bank gives them letter of credit, and against that they charge interest from the exporter or importer, right? So when bank becomes the guarantor of an importer or an exporter, it is a letter of credit, right? When a bank becomes a guarantor of an importer and exporter, it becomes a letter of credit. Mortgage is nothing but keeping something as collateral while taking loan. So if I want a loan of 10 lakh rupees, I say, okay, keep my house. If I'm not able to pay, you go and sell off my house in the market, right? You go and sell off my house in the market. My house is a mortgage. House is a mortgage, collateral, right? What is overdraft? Overdraft is nothing but if I don't have enough money in my bank. Overdraft is if I do not have enough money in my bank. Bank says, okay, no problem. You spend more, you pay us later, right? Let us suppose I have 10,000 rupees in my bank, but there is a business need and I say I have to give 15,000 rupees to my suppliers. So bank says, all right, we'll pay 5,000. We take 10,000 from your bank and you pay 5,000 from us. That is overdraft. Above what I have, the bank will pay, right? That is overdraft. I have 10,000, I have to pay 15,000. So the bank gives me overdraft. Bank pays extra 5,000, charges an interest later, and I have to repay that money later, right? What is a syndicated loan? Syndicated loan is when a lot of different banks, you see the case of Vijay Mallya, the case of Nirav Modi, right? 5-7 banks together gave huge loans of 10,000 crores, 60,000 crores, SBI, PNB or HDFC, ICICI Bank. 3-4 big banks came and gave one loan to Nirav Modi or Vijay Mallya. That is syndicated loan. Combined loan from different banks together for the same purpose, for business purpose. Right? That is syndicated loan. That is what we understand by syndicated loan. Right? Mortgage is nothing but collateral. If I don't pay, sell off my house. I keep my house as mortgage. That is mortgage. Right? Okay. Coming to syndicated loan is back here. Value at risk. Right? That is at stake or subject to loss due to variation of prevalent interest rates. It is nothing but when there is variation in interest rate, the value I might lose. Right? This is a very technical thing. Another half an hour for this. Just understand when there is a risk due to change in interest rate, right? The amount of risk in monetary value is value at risk, right? When the interest rate is about to fluctuate, like even in coronavirus, the interest rate might fluctuate. So this value, this monetary value, due to this interest fluctuation is value at risk, right? Zero down payment mortgage. What is zero down payment mortgage? Is that we do not pay anything straight out. When you take a car loan, if you see how you take a car loan, when you go and take a car loan, you pay 3 lakh rupees and the balance 4 or 5 lakh rupees you have an EMI, right? So zero down payment mortgage is where you do not pay a down payment. The entire thing is in EMI, right? That is zero down payment mortgage, where you do not pay a straight out money, but the entire amount is an EMI. That is zero down payment mortgage, right? Generally, you pay certain amount and the balance amount is your EMI, or like easy monthly installments, small installments, right? But when you do not pay anything straight out and the entire amount is EMI, that is zero down payment mortgage, right? Okay, I know I'm running really fast because there are a lot of technical terms. Right now, that is the idea. The idea is we will have to go to this lecture again. Because if we go on discussing each and every term, there are around 150 plus terms and it will take 2-3 days, right? So what I'm doing is trying to give you easy examples, easy references, so that when you revise 2 or 3 times, you have to watch this and it will be 100% clear. Like I think I've given ample examples. So even if you're not getting it in one go, not an issue. You have to watch this again, right? You have to watch this again. And only then you will make more sense of these terms, right? So I request you watch this again at your own pace, right? But what I'm trying to do is give examples and references so that it is there for you, right? Okay, quickly jumping on to other terms. Acquisition. I just told you acquisition is acquiring. Acquisition is nothing when organization buys another organization, it takes over another organization, is acquisition. They acquire that company, they acquire that organization, right? Bankruptcy is when I do not have any money to pay my liabilities. Bankruptcy is I have to pay people 1 lakh rupees, but I have 0 rupees. I am bankrupt. That is bankruptcy, right? I have to pay people lakhs or thousands of rupees or whatever XYZ amount, but I do not have money to pay them. That is bankruptcy, right? That is bankruptcy. Okay. What is Jan Dhan account? A Jan Dhan account is nothing but an account from the government, right? You have to be aware about the news, right? Okay, bankruptcy is when I do not have enough money to pay off my liabilities. That is bankruptcy. Coming to bottom line. Bottom line is nothing but net profits, right? Technical terms. This chapter is telling you about technical terms. So you might be confused. What is bottom line? What is bottom line? Bottom line is the income after all expenses. It is net profit. Net profit is also called bottom line. Bottom line money means net profits. Bottom line means net profits. It is the same thing as net profits, right? It is the same thing as net profits. What is corporate governance? Corporate governance is internal checking that the operations, all the compliances have been taken care of. The board of directors appoint an audit committee. They oversee that everything in the company, all the Companies Act compliances, audit compliances, taxation compliances, all the legal compliances, and the behavioral aspect, whether the company is in the right direction, is it ethical, is it doing the right thing as per law, is it doing right thing for the employees. That is what corporate governance is all about, right? Corporate governance is governing, checking, regulating the organization internally, right? This is all these reporting performance, independent audit, board of directors appointing committee to check everything is in line and is compliant is corporate governance, right? What is a joint product and a byproduct, right? We all have studied this in business studies. For those, I'll give you a quick example. A joint product is something, for example, in oil industry, your gasoline or fuel oil, lubricants is a joint product, right? That is what they come out of this. Like if you're processing petrol, if you're processing crude oil, you get petrol, you get wax, you get fuel oil, you get lubricants. Everything is from that oil. But byproduct is like molasses, like good from sugar, or you have something that comes out of that particular product is a byproduct, right? And something which is similar, which is coming out of from the same thing is a joint product, right? Something that is coming, like oil industry, the crude oil gives out oil and kerosene, petroleum and kerosene. They're joint products. However, when you are making from sugarcane sugar, when you're making sugar, you have molasses, you have good, you have that liquid sugary content. That is a byproduct that is coming out of sugar, right? Okay, so byproduct and joint product. Joint product is from the same thing, byproduct is out of that one thing, right? Okay, coming to proprietary forms of business are like partnership or sole proprietorship or proprietorship, where there are no organizations like companies. When it is not a company, it is a proprietorship. As simple as that. When it is not a company, it is a proprietary form of business like sole proprietorship or partnership, right? These are proprietary. People own this, not huge organizations or companies. People own these businesses. People own these business organizations like partnership and sole proprietorship, right? What is triple bottom line? Very, very interesting topic. Simple as that. Read the underlined thing. In BCK, the philosophy is profits, people, and planet. We discussed that a business has to take care about profits, about people of the organizations who work within and outside, and the planet. They have to be socially aware. They have to be sustainable, right? So triple bottom line in BCK means three things: profits, people, planet. Triple bottom line: profits, people, and planet. In BCK, in business terms, someone, if you read a strategy of a company and they say our focus is on triple bottom line, that means they're focusing on profit, on people, and on planet as well. That is triple bottom line, right? Okay, what is turnaround? Turnaround is financial recovery. Let us suppose there is a company which is going bankrupt, but when they bounce back to strategy, they get wonderful loans, they start a new business, and they turn around. They turn into a profitable business. That is called turnaround strategy. From bankruptcy, they turned around. From bankruptcy, they turned around into profitable business. That is called turnaround. They just shifted their situation, right? A turnaround is a financial recovery of a company that is poorly performing at an extended time, right? For a long period of time, there are losses, there is no business, but suddenly they start a new business or they innovate something and they turn around those losses into profit. That is turnaround. They convert those losses into profits. That is turnaround, right? Last is vision and mission. Vision and mission. We talk a lot about vision and mission. What is vision? What is mission? Straight out, if we can define, is mission defines company's business, its objectives, and approach to reach these objectives. Mission is goal oriented. Mission is this is what I want to do and this is how I want to do. Mission is this is what I want to do and this is how I want to do. Listen carefully. Mission is this is what I want to do and this is how I want to do. Vision is this is what I want to be, right? Mission is this is what I want to do and this is how I want to do. Vision is this is what I want to be, right? There's a huge difference. Vision is this is what I want to be. Mission is this is what I want to do and this is how I want to do. I want to be the best company in the world in manufacturing of tube lights. Vision, right? I want to produce the best tube lights through innovation, through least consuming electricity consuming technology. That is mission. I want to be the best company making tube lights is vision, right? Simple difference between vision and mission, right? Last 5 minutes. We're really short on time. Last 5 minutes. Any doubts and questions related to this stuff? I think all your MCQs. I see a lot of you have questions on MCQs as well. I have taken that down. All those chapter 5 MCQs and chapter 2 MCQs, I have them written down, right? Just make sure you mail those MCQ doubts on this email ID, please. Right? A genuine request. All your doubts, even in the MCQ part, please write down your name, write down my name, write down the chapter name, write down the syllabus name or the subject name, right? And mail it to virtualclasses@ici.in, right? Mail it to this class, mail it to this email ID, or even your MCQ questions. I have those. A few of you, I see Sangam has answered a few, asked a few MCQ questions. Any of you have doubts in MCQs or any doubts whatsoever, concept-based. I would really push you to ask concept-based questions. If you have doubts on terminology or some word meanings, Google is the go-to place, right? I can be very honest. It saves a lot of time for you as well. If you have any concept problem, why is that? Why is this? How is this relevant? Or why is this the answer to this? Ask all your questions at virtualclasses@ici.in, right? I will answer all these questions. My aim is to answer all the questions by Friday, right? Really shorten time on these sessions. A lot of things to cover. So really excuse if it's running really quick. But all your questions, all your doubts will be clear. Be assured. Any day, I can assure you that will happen. All your doubts and questions should come on virtualclasses@ici.in, right? So with that, this was the last session for this entire syllabus of BCK. And it has been a wonderful journey for me. It has been a wonderful platform to interact with all of you. I'm really glad. I was not expecting that people would really want to interact. They would really want to actually understand this subject. But I'm really glad a lot of you, like in thousands, you have watched these lectures, interacted, asked your doubts, understood the concepts, like even appreciated me. Thank you so much for that. It has been a great experience. And I think I will find some way or the other to come and interact with you guys once more again before the exams. Let me figure that out. I cannot assure that, but I will find something, right? Meanwhile, I would just request as a professional advice on social media or anything, just start making LinkedIn. As a professional advice, I can say you're very beginning in the professional career. Start making your profiles on LinkedIn. See what people are doing. You get to know what actually chartered accountants can do, what all they are doing, what all more things they are doing. So go on LinkedIn, make your profiles, right? Find good people and read about good people. Find what people are doing. That's one advice for you all of you, right, at foundation level. So with that said, a very, very big thank you to all of you. And please study hard, focus, very few, I think 45 days left, right, for exams, core days of studying. So best of luck, do well and make your parents and yourself proud, right? And with that said, thank you so much. All your queries on virtual classes at ici.in. I should get all the queries. Like, I think a lot of you have those queries, so please send those queries. Don't be afraid to send those queries, whether they'll be solved or not. They will be solved. It might take a few days, but I'll solve that. And with that said, thank you so much. Stay home, stay safe, and it has been a great experience. Keep revising through these lectures. Ask your friends to watch these lectures. It has been a great effort and great thing interacting with you guys. Right? So thank you so much. Thank you so much to everyone. Take care, stay home, and take care of your parents. Right? Thank you.